Hey, what's up, Butte County real estate investors? Man, it's been a minute. Sorry for the pause. I took a little bit of break for social media for Lent, actually, and now I'm coming back. And I have a video here on how the coronavirus can affect real estate. Doing a lot of listening to the local market here, portfolio owners, and then obviously nationwide, listening to economists and different things like that. And I have a few of my thoughts here on the coronavirus. So we want to get into it right now. So basically what's going on is each month was a significant month. So the lockdown, the economic lockdown went in place here in California in mid-March. So it was going to be interesting to see, with everyone losing their jobs, 16 million people applied for unemployment nationwide. So this has affected just about every state, every city. How is that going to affect rents? That was the million-dollar question. What's our rent going to look like? A lot of owners were freaked out, and understandably so. What's going to happen? So what we've seen over talking with people, I've seen between 85 and 95% of all the rent has been collected for April. Now this includes vacancy, so we already factor in about 2-3% for vacancy. So that is not a terrible number, really. And this was as of Friday, so Friday, I believe it was at the 9th, or the 10th. Rent still comes in a little bit. It still trickles in. So that number could increase, but that's not a terrible number. May is when the unemployment kicks in. You know, the United States government kicked in this ridiculous unemployment. It's almost like getting paid like $80,000 a year. When you factor in the taxes you don't have to pay, it's like $1,000 a month. It's very, very generous. So May is going to kick in that. So everyone who did lose their job is going to basically, a lot of people are going to get paid more for sitting on the couch being unemployed than they're going to get paid for actually working, which is incredible. And that money is going to go to pay your rent. So May is when unemployment kicks in. I think May is going to be just fine. The real question is what happens June, July, August, and moving forward. Still a bit of a mystery, but overall, you can't really say, but so far it hasn't been a disaster. Not really at all. It's actually been pretty good, and I think May is going to be just fine because of those things. So what happens in the future, really is a little bit of a mystery. But here's what I really wanted to talk to you about. I think that the shift is going to come in real estate investment on management. For a long time, especially in California, real estate has been more of a commodity. It's almost like selling bread to people who are starving. Everyone needs a place to live. And with a low vacancy rate and the economy doing so well, you really had to open the door, give a tour, and you got a lease. I mean, it was very, very easy. Didn't have to invest too much in advertising. Didn't have to invest too much in management. If someone didn't pay their rent, you give them a 30-day notice, and they're out. And legally, you could still do that. Now things are shifting. You cannot evict anyone, even if they don't pay rent. So marketing is going to change. In my city of Chico, there's been a lot of multifamily construction here, so it's a lot of new supply. So really, the focus is going to be on management. There will be winners and losers in this deal right here, okay? And the winners are going to be those who can understand the incentives for marketing, for getting things leased up, have the best property manager, and have the best communication, okay? You want to be communicating with your tenants right now, saying, hey, if they lost their job, working things out, helping them to figure out how to pay rent and that kind of a thing. And people are going to try to scam the system. They are going to try and not pay rent. We've had people call our office here. We manage about 600 units here in Chico. Hey, I only got $40, and because we're well versed, we understand, hey, you can't just not pay your rent. We can defer it, but you're gonna have to pay it eventually. Things like that, and they go ahead and pay the rent. It's kind of funny, but people are gonna try and scam this, and so you want to have good management. You want to operate this real estate. The people who operate like a business and operate it well are gonna come out to be the winners in this, and consequently, those who are just kind of letting it go a little bit, I think they're going to take some hits here. Okay, real estate still makes sense as an investment though, and here we're going to go over here. And the reason is because even in an economic recession, depression, whatever we may have here, it's a hard asset. It's an essential thing. So if you're invested in something like Uber or whatever, I mean, sometimes it's essential. The non-essentials are going to get, decimated in recessions and depressions. But housing is an essential thing. And it's also a guard against inflation. So say we see a 5% inflation. Well, if you bought $1 million asset, you put 200,000 or 300,000 down on it, and say you have a 4% interest rate for 30 years, even if you get inflation of 5%, 6%, it's a guard. Owning that hard asset is actually a guard against inflation. So, and your rents can always go up with inflation. Actually, even in California, you can raise your rent 5% plus CPI, which is inflation. And so it really becomes an asset that is a guard against inflation. As inflation goes up, you can raise your rents, and the value of your real estate will rise with inflation. Okay, so that's still a good thing. But you got to have the right type of real estate. Not all real estate. There's going to be winners and losers in the asset class of real estate that you own. And my thing is a little off here. So I can see what type of real estate we have. Office space. Office space, probably not going to do too well. There's a lot of things with people working from home. They're saying the office could be in serious trouble. Okay. Retail space, again. They already had the Amazon effect. These stores closing, Kohl's, these kinds of things, it could be tough. So if you own retail real estate, you're going to see big discounts going on office and retail, because it's going to be high. These are the asset classes that are going to be at risk. Single family homes, the market locally here is still super hot. It's crazy. The time on the market's going down. There's still multiple offers on houses. I don't understand though, because more people in the nation last month deferred on their mortgage loans than at any other time in history, right? And so there's you can defer your loans. More people are doing that. So I don't understand how this doesn't get hit. Especially on the luxury side. I'm just saying, again, luxury houses, it's not a necessity. And also people tend to stretch for their own single family home that they're going to live in. A lot of times it requires both people inside the home working. So if one lost a job, one's on unemployment, say they're high income earners, there could be a problem here with single family homes. Also, the qualifications to get a loan, we were doing 5% down for a conventional loan. You can get an FHA 3.5% down. Chase Bank just came out, you need 20% down now. You need at least a 700 credit score. So the lending on these are going to be a little bit more tough, and that could hurt the market there. Okay, that's just my thoughts. I think what the winner is going to be is what I've always been telling you for day one: multifamily. B and C class multifamily, $1,000 to $1,500. Affordable apartments. Man, this is a thing that becomes in demand. Everyone needs a place to live. So I think these are going to be the key things to own, which is what I've been saying since I've started this group. You guys can understand that. And here's where the opportunities are going to be. Okay, so again, I said management is going to be a key thing to focus on. If you don't manage it right in this time, you get taken advantage of. You can't evict people. You're not communicating with your I got a phone call there. You start getting squatters and people you can't evict, people not paying rent. It's going to affect your rents. Your rents are going to go down. Now, I don't know if you can see this either. How you value multifamily properties is its rent income minus expenses equals your NOI. And the value of every investment property is always based off the NOI. That's the profitability of that property, of that asset. That determines the value. If your rents go down, your expenses are going to stay the same. So if your rents go down, your NOI is going to go down, the value is going to go down. That's where the opportunity is going to be. It's going to be those guys who are, 75 years old. They own 15 units across the country. They're self-managing. It's just a mess. We all kind of know those kind of sort of, I don't want to say slumlords, but people are just, they're not keeping up the property. They're not communicating well. Those people are going to get those squatters. It's going to be tough. There's certain portfolios that I've talked to, they're at the, 95, 90, 85%. There's others that I've talked to that have a bad manager, quite honestly, bad communication, and they're sitting there more at 60% rent, collection. After a while, it's going to be hard to collect that back rent. That is definitely going to show up for an investor. They're going to want to sell that property, and when they go to sell it, people are going to look at what's the income, what's the expenses, and they're going to see, dude, you ain't making any money. This thing's losing money. If I buy it from you right now, I'm going to lose money. We're going to have to lower the price until it makes sense. That is where the opportunities come in, and that's what you're going to want to know. Now, to get these opportunities, typically you're going to have to know someone. Someone, basically like me, I'm making phone calls. I'm calling multifamily owners. How's it going? How you doing? Are you buying? Are you selling? What are you looking to do? Right? Someone on the inside track. These are we manage 600 units. We know these owners of these properties, right? In the past, we managed 2,000 owners. We still have all their contact information. I still call them. Hey, we don't manage your stuff anymore, but how's it going? You're going to want to connect with an agent or someone on the inside who's going to know where these deals are, okay? And to be able to get an off-market deal where you're going to be able to communicate, someone wants out, they're older, they're retired, they don't need it anymore, and it's becoming a massive headache as 60%, 50% of the rent collection comes in. As these months go by, that's where the opportunity is going to be. Here's the challenges. All right, challenges are going to be getting a loan, okay? So say you find this deal, it's 50% occupied. That's where the deal is. And say it's worth $2.5 million, you can get it at $1.5 million, right? And you're saying, shoot, if I just rent 5 of these 10 apartments or whatever, man, I'm gonna increase $1 million in value because I'm gonna affect the NOI. But the thing is, who's gonna give you a loan for $1.5 million? What bank in their right mind is gonna go and say, yeah, I'm gonna give you a loan on this property where you got people you can't evict and they're not paying rent? So the challenges are going to be getting a loan, all right? Another challenge is going to be finding investors, right? The stock market took a hit. There's a lot of people who normally would be cash investors that are having a tough time right now. So finding investors that have cash that can get these deals done is also going to be a challenge, okay? A challenge is no eviction. So if someone just wants to squat in your place right now, you can't do anything, okay? You could account for their rent and charge it back to them. But there's going to be that period of pain is going to be there, and so that's why you got to focus on management, focus on operations, right? So that is a challenge right now. Now, if you can do well at these challenges, if you could take over that property that has 50% of people not paying rent in it, that's where the value is going to be. And if you can get a loan on it, if you can get investors, if you figure out a way to get these people paying, if you could overcome the challenges, you are going to win. Okay. Also, some other challenges that are kind of outside of our control. Rent control. They could get more strict on rent control. That could happen. We already have statewide rent control. That could happen. Socialism, always a threat. There's people high up in power. There's a growing group of socialists that want to take your private assets away. So that's that could affect real estate moving forward in this time. So that is basically my just thoughts, just some general ideas. I probably should have done 10 videos on all this, but I just did one big exhaustive video. I'll be posting more possibly, but that's how coronavirus is going to affect real estate, in my opinion. That's where you want to focus on, management. The opportunities are going to be those who aren't doing a good job here, but then you're going to face the challenges right here in this column of getting a loan and finding partners and that kind of thing. So if you can win here, you're going to win big. It could be one of those transfer of wealth times in our country where those who can do this well will win big, but there will also be people, no doubt, who will lose. I'm just saying. So that's it. Comment in the comments below, and I will talk to you soon.